create something great. Now, today I'm super excited what I have planned for y'all today. We're going to be dropping a new series, a new episode within our Creative You series. Creative You is going to be a playlist, right, where we break down different indicators so we can truly understand what they're doing. We break down different algo strategies, like really breaking down to the bolts and notes and being able to understand really machine learning or AI agents. Today, what we're going to be doing is going over VWAP, and we're also going to be creating a strategy for VWAP. Now, for those that don't know, VWAP is the volume weighted price average, and it's an indicator that allows us to see if something is if we're buying with the institutions, right? Because if we're buying with smart money, that's letting us know that we're not overpaying and we're buying at the right price. So if you haven't already, I need you to go ahead and subscribe and like. So let's go ahead and jump into this. So again, as I stated before, we are going to be going over VWAP. And what is VWAP, right? VWAP stands for the volume weighted average price. It is the average price a security has traded throughout the day. And that's something that's important that we need to be able to understand, right? VWAP resets every single day and it's weighted by volume, right? Volume, think about it this way, it's the number of people that are lining up to go into a club or to go to an event, right? When you first go into an event, if there's nobody there, then there's rarely no volume, right? But if it's a packed house, now we have some volume. So volume are just the number of participants, buyers or sellers, right, that is trading that underlying asset. So this means the periods with higher trading volume have more influence on VWAP than periods with lower trading volume, right? Because it's weighted by volume. Now, why does VWAP matter? Why should we even care about it, right? VWAP allows us to be able to see where institutional traders use VWAP as a benchmark, right? So they want to make sure that they're not overbuying and they're buying at a prime price. It acts as support and resistance levels throughout the day. Now, I know we talked about support and resistance, but let's just go ahead and bake it in one more time, right? Now, excuse me. Support is going to be when the asset is making lower lows, when the price of the asset is making lower lows, right? So when you hear that an asset is crashing through support levels or is touching support levels, that lets us know that it's the price is making lower lows, right? And when you hear that an asset is going through resistance levels, that's letting us know that the price is making higher highs. You ever hear that adage, you buy low and then you sell high? Here's one of those birthplace of it, right? So where support and resistance allows us to be able to gauge how low or how high the price has been for that time period that we're capturing, right? So it acts as dynamic support and resistance levels throughout the day because it's using volume as an average, right? And it helps us identify the current price is a fair value, and it resets every single day at the market open. So now we're going to be looking at SPY, live SPY data, and SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. And I pulled it since Friday because I'm recording this on a Sunday and the market isn't open on Sundays, right? So we pulled it when the market closed on Friday, which was the 9th, and the current price was 694.48, right? So today's VWAP or that day's VWAP was 693.15. So the difference is about 0.19% or $1.33. So the price is above VWAP, right? Meaning that trading about average, buyers are in control, right? So let's understand the numbers. When the price is above VWAP, the current buyers are paying more than the average price paid by all traders. So that's one way for us to be able to figure out if we're getting a fair price or if we're overpaying, right? And if when it's below, they're getting a better price than on average, right? So a couple things to be able to make note. What is VWAP? VWAP is the volume weighted average price. It is the average price for the security traded throughout the day and is weighted by volume. This means that VWAP means with periods with higher trading volume has more influence on VWAP than periods with lower trading volume. VWAP acts as a benchmark for institutional traders, also algo traders, right? Because it allows us to know if we're getting a fair price or overpaying. It acts as dynamic support and resistance levels. Support is letting us know that the price is making lower lows. Resistance is letting us know that the price is making higher highs, right? and it helps us identify if the current price is fair value, right? And one thing to just keep in note, it resets every single day, and we understand when it's above VWAP, we're paying more than the average price, and when it's below VWAP, we're getting an average price. Got it? All right, let's go ahead and jump into the quiz. Yeah, I got a quiz for you too, huh? All right, so what does VWAP stand for? Is it A? Is it the volume weighted average price? That sounds interesting. Is it B? Very wide asset price. That's hilarious. Or is it C? Variable weighted algorithmic price. That sounds interesting that it could be that. So which one do y'all think it is? Go ahead and type it in the chat. All right, so I'm seeing A, so let's go ahead and go with A. Oh, look at that, we got it right. Explanation, VWAP equals the volume weighted average price. It weighs each price by its trading volume, right? All right, when does VWAP reset? Does it reset every hour? That's interesting. Does it reset at the start of each trading day? Or is it never? It's a continuous calculator. So which one do y'all think VWAP resets? So I'm seeing B. So let's go ahead and put that. And you got it right. VWAP does reset at the market open each day. It is a intraday indicator that starts fresh daily. If the price is above the VWAP, what does this indicate? Right? Again, the price is above the VWAP. What does this indicate? The current buyers are paying less than the average. The current buyers are paying more than the average, or the stock will definitely go up. That's interesting. All right, now remember, let's think about this. VWAP allows us to be able to gauge if we're getting a fair price for the particular asset, right? So if the price is above the VWAP, that's letting us know that we're paying more than the average, right? So let's go ahead and go with B. All right, look at that. We got it right. VWAP, price above the VWAP means that the buyers are currently paying more than the average price for the day. All right. So here's the VWAP formula for those that are interested. VWAP is calculated using this formula. VWAP equals the sigma or the sum. I think sigma is sum, right? I'm going to come back to that. Typical price times the volume divided by the sigma or the sum of the volume, right? Yeah, so I was right. Sigma does equal sum. So that little sign here is sigma. Greek sign is sigma. So where the typical price equals the high plus the low plus the close divided by 3. Now the sigma symbol means sum, where we add up all the values from the market open until the current time. So it's step by step. So typically we calculate the typical price for each period. We have the high, low, close, and divided by 3 because there's 3 prices here, right? The high, low, and the close. Then we're going to multiply the typical price by the volume, so TPV, so typical price by the volume. And then step 3 is keep running totals. So the total TPV or the total typical price volume and the total volume, and then we divide it by the VWAP. So total TPV divided by the VWAP. Now let's calculate it using real SPY data. So I'm pulling this data using Thinkorswim or TOS, right, in order to pull in live data from SPY. Now, one thing to be able to keep in mind when I am recording this, the market is a bit, it's all the way closed, right, because I'm recording this on a Sunday. All right, so let's keep going. So here's the first trading minutes that we're able to bring in, right, and as we can see, we have VWAP continuously calculated here, right. Key observation is that VWAP stabilizes as more volume is included. I see that. High volume periods pull towards high volume periods pull VWAP towards their price, as we can see indicated here, right? The current price, the high, typical price, 690, right? High volume period, it's pulling VWAP towards it. Let's see, another high volume period is trying to pull VWAP towards it, right? Where's another? So those are the only 2 high volume periods. And that's the first 10 minutes of the market. So we have market open. This definitely does make sense because you have a lot of people that are either rushing in to buy or rushing in to sell. So I can understand why the volume is in the millions there. Then at another 5 minutes of the market, so about 9:35, we have another million spike, right, for SPY. And that makes sense. For the first 10 minutes of the market is kind of stabilizing. It's trying to find its sea legs, for lack of better words. So let's go ahead and take the quiz. So what is the typical price formula, right? So what is the TP or typical price? I don't want to confuse you because when I think of TP, I think of take profit. So let's just say, what is the typical price formula? Is it the open plus the close divided by 2? That's interesting. Maybe that could be a formula or a strat. Let's keep going. Is it the high plus the low plus the close divided by 3? That seems like it could be right. Or is it the high plus the low divided by 2? That's another interesting one. So which one do y'all think it is? I'll wait for a second. I can have the Jeopardy music. Doo-doo. All right, let's keep going. And it is B, right? Explanation, the typical price equals the high plus the low plus the close divided by 3. This represents the average price for that particular period. A 1 minute bar comes with a volume of 10,000, right? Versus one with a volume of 100. Which one affects VWAP more? So let's think about this, right? So VWAP cares about what? VWAP cares about volume, right? So if we have volume that is 10,000, then we have one that's only 100, damn near of 1% of its size, right? Which one do you think is impact VWAP more? They affect it equally. That's interesting. The 10,000 bar affects it more, right? Is it the 100 volume bar affects it more? So let's think about this, right? Again, VWAP cares about volume. So the more volume we have, the closer it's going to be to bringing that particular bar closer to the VWAP price, right? So it is going to be B. Higher volume equals more weight. The 10,000 bar has 100 times more influence on VWAP versus the 100 bar. So VWAP is a blank calculation, meaning it includes all data from market open. VWAP is a cumulative calculation, so it keeps adding on, right? VWAP is a moving average calculation, or VWAP is a fixed period. So which one do y'all think it is, right? I think so. VWAP is the volume weighted price average, right? So is it a moving average or is it a cumulative, right? Being able to add on when the market opens. So which one do y'all think? All right, I'm seeing cumulative. All right, it is cumulative. VWAP is cumulative. It continuously adds data. Excuse me, it continually adds each new period's data to the total from the market open. All right, let's go to our next lesson. VWAP as support and resistance. So VWAP acts as dynamic support. Remember, this is when the asset is making lower lows, or resistance. This is when the asset is making higher highs throughout the trading day. Institutional traders often use VWAP as their execution benchmark, creating a natural pressure at this level. So when the price is above VWAP, it acts as support. Buyers defend this levels, and bullish bias is at play, right? So when it's above, acts as support. Buyers defend this level, and we're bullish on the market. So we're thinking that the market is going to go up, right? When it's above the support levels, right? So that makes sense. When the price is above support levels, we want to be able to defend this position, the buyers, that is, or the bulls, because they're bullish on the market and thinking that the market is going to go up, right? So that's support. Now, when the price is below resistance, VWAP acts as resistance. When the price is below VWAP, VWAP acts as resistance. Sellers defend this level, right? So the biggest difference that we're seeing here, that bulls are buyers and bears are sellers, right? And bearish bias is at play. We're thinking that the market is going to go down. So if the price is below VWAP, right? Below it, right? We're thinking that the market is going to go down. So they're bearish on the market, right? And they want to be able to defend it. The sellers, that is. Price at VWAP, this is our equilibrium zone where we have a battle between the buyers and the sellers. Breakouts often lead to strong moves when it's at the VWAP, right? So analyzing the SPY price action around VWAP. So the periods around VWAP is 30-30, or periods below is 0-30, right? So periods above VWAP, right? So that's bullish play. So we're thinking that the market is going to go up, right? So the buyers are firmly in control. And the periods below VWAP, where it's a bearish bias, right, where the sellers are in control, it's 0. So we have a strong bullish bias, right, that the underlying market is heading towards an upward trend. Now, this is based on Friday's data. Now, the recent price action for the last 10 minutes, right? So we're going to have the price coming in and then the above, right? So we can see definitely a bullish sentiment that is baking out here, fam. All right, so if the price is trading above VWAP, right? VWAP typically acts as, is it resistance? Is it support? Or is it neither? It's just a line. That's funny, right? So let's think about this. Let's break it down. If the price is trading above VWAP, right? So that's letting us know that the price, quote unquote, is a bit expensive. It's above the average, right? So if it's above the average, that is letting us know that the price is above the average, that it's acting as what, support, right? Because it's not below. Because we're thinking we have a bearish, excuse me, bullish sentiment is at play, and we think that the market is going to go up. All right, so when the price is above VWAP, VWAP acts as support. Buyers tend to defend this level. And that's for acting as support. Why do institutional traders care about VWAP, right? So why is this something that we should even worry about? It looks nice on a chart. They use it as an execution benchmark to measure the trade quality, right? The government requires it. This is not a dictatorship, even though they. Never mind. Let me get back over here. All right, so it is going to be B. All right, institutions use VMark as a benchmark for their execution. Buying below or selling above is a considered a good execution. So the funny. The stock bounces off VWAP 3 times before breaking below. This suggests that VWAP is acting as a strong support. The stock is about to crash or VWAP is broken. So let's think about this. The stock is bouncing off VWAP before breaking below, right? So what's happening? VWAP is acting as a strong support, right? Because it keeps bouncing off VWAP, right? So let's look at it. So let's consider this VWAP, right? So when the price keeps bouncing off of it, then just keeps going back up, right? So that's letting us know that VWAP is acting as a strong support. Multiple successful tests at VWAP without breaking shows acting as a strong support. All right, so professional traders use VWAP in several different specific ways to make trading decisions. Here are common and effective strategies, right? Mean reversion, price tends to return to VWAP when to use it. Price extends far from VWAP with a deviation of 0.5. No major news or catalysts are present. Setup, when the price spikes above the VWAP, we're going to look for shorts, right, or puts. And when the price drops below VWAP, we're going to go long or we're going to look for calls, right? The target is to return to VWAP. Maybe I'm going to create a little baby strategy using Claude Code with respect to that, right? Being able, because we are going to create a very, very simple baby strategy today. And I'm thinking that's going to be a mean reversion strategy using QQQ. All right, so trend following, right? So that's what is a trend? It's the underlying direction that the market is going in. An uptrend meaning that we're in a bullish environment. A downtrend is meaning that we're in a bearish environment, right? So VWAP following, trend following with VWAP. Trade, excuse me, concept, we trade in direction for VWAP position. Trade in the direction of VWAP position. I thought I said that wrong. Bullish setup. The prices consistently stays above VWAP. The price dips back to VWAP support, right? So it's making a lower low. And then we add positions on the VWAP bounce, right? Now this is stocks. Adding positions. That sounds like a stock move, right? We can make this a little options because here we focus on 0 DTE options. These are option contracts that expire the same day, but we can convert this to being stocks. That's, options. So let's keep going. The bearish setup is the price is consistently staying below VWAP. Then it rallies back to VWAP resistance. It's making a higher high. And we add short positions on VWAP rejection. And then a breakout confirmation, what everybody likes, right? When a price breaks out, you want to be able to catch it, right, for those 2 or 3 minutes that it broke out for. So VWAP crosses confirms the trend change, right? Price breakout, the price breaks above the VWAP with volume. It stays above for 3 periods or 3 minutes, and we enter on the retest of VWAP as a new support. And then for the bearish breakout, we have the price that broke above, excuse me, I broke below VWAP with volume. Why do we care about volume, right? Because it allows us, lets us know that there's participation, right? That there's other individuals that are looking at this as well. We're not the only ones at play, right? And it stays above for 3 periods or 3 minutes because we use 1 minute candles here. And we enter on the retest of VWAP as a new resistance, right? So the current price 690. Now again, just keep in mind that we are looking at it when the markets are closed. So 694.48. The current VWAP is 693.15. Deviation is 0.09. Trend, recent trend is the periods are above VWAP. So we have a bullish trend follow. All right, so mean reversion strategy expects the price to do what? Keep away from VWAP, like it has a bad cold, like it has cooties. That's funny. Return back to VWAP or cross VWAP multiple times rapidly, right? So mean reversion, we expect the price to return back to VWAP. Yep, expecting the price to revert or return back to the mean or VWAP. We extended moves often to a pullback, right? For a bullish trend following setup, we want to see which of the following: the price consistently below VWAP. Now, if it's below VWAP, what is it doing? It's touching the what, right? If it Okay, so let's keep going. Then we're going to answer this. The price is consistently above VWAP, or the price crossing VWAP randomly. So we know it's not randomly, right? We just have to think about this a little bit more. If the price is crossing below VWAP, right, that's letting us know that we're entering into a fair buying territory. Who's in control? If it's below, right, we're seeing that the bears are in control and they want to be able to push the price down. Or if it's above VWAP, right? So for a bullish trend following setup, we want to see that the price is below VWAP. So I could be wrong too. That's all right. Trend bearish setups, the price stays above VWAP and we buy the dips back to support in an upward trend. So VWAP breakout is most reliable when confirmed by high volume on the break, the time of day, or the stock's ticker symbol, right? So that's a bit of bias there because we want to be able to, VWAP is agnostic, right? It really doesn't care about the symbol, it more so cares about the volume, right? So the time of day, that's interesting. Now, there's a school of thought that says that early morning strategies maybe have a little bit more of them, a little bit more juice, if you would, in it than later in the day strategies. But hey, this is different schools of thought, so that's what an opinion, right? So we're definitely going to break it down to high volume on the break. Beautiful. So here's our last one, and then before we actually get into being able to create a strategy, right? So VWAP is crucial for understanding, right? The relationship between the price, VWAP, and the volume tells us where the most significant trading occurred and where traders have most at stake. Why volume matters with VWAP. High volume at VWAP is strong levels. More traders participated in at this price creates dynamic or stronger, support or resistance levels. The volume profile shows participation. Where did most traders occur to, where did most trading, occur today? That's where traders have positions to defend. Breakout needs volume confirmation. Low volume breakout is likely a false move. High volume breakout is a conviction behind the move. So we're going to be analyzing the SPY volume distribution. Today's volume is about 69 million shares, right, that we're trading SPY. On average a minute, it's about 93,000, and the number of periods is 738. The top 5 highest periods, right, we have 435, 4, divided by subtract 12, then that's 5, 59, 433. So after the market closed, right, we're seeing higher periods of VWAP. And then the distribution above VWAP, we have 86%. And when it's above VWAP, that lets us know what, right, that we have a bullish setup in control, and it is currently overpriced, right? And when it is below VWAP, we have a bearish setup in control, and now we're getting fair pricing. So buyers are controlled the majority of the volume. So VWAP level, excuse me, a VWAP level with high volume is likely to be a weaker supporter resistance, stronger supporter resistance, or volume doesn't matter for VWAP. That is hilarious. If you answered C, what's the point of listening to me for these past 20 some odd minutes, right? So it's going to be B. High volume equals more trader with a position at that price, stronger levels to defend. So if 70% of trade, excuse me, if 70% of volume traded above VWAP today, that suggests that sellers were more aggressive, right? Now it's above, it's not below, right? So if it's above, that lets us know a few things. That lets us know that it's currently overpriced. It's not a fair price, right? What else does it let us know, right? That it is above resistance levels, right? It's making higher highs, right? And also lets us know that the buyers are more aggressive, right? Most volume above VWAP means that the buyers were willing to pay above the average price, showing buying pressure. And now a price breakout above VWAP with low volume is very bullish and reliable. It's likely a false breakout or it's guaranteed to continue higher. Now, this is one of those, I don't know. It is. So let's answer the question, then I'll give you my opinion, right? So the price breakout with low volume, right? Very bullish and reliable, likely false breakout or guaranteed to continue higher, right? So we have a breakout with low volume. So that lets us know that there isn't that much participation, even though that the price is above average, right? So likely it's going to be a false breakout. Now, here is my little 2 cents on this, right? Now, even though volume, right, is needed in order to understand VWAP or understand VWAP a lot more, I've seen trades where low volume, even with the breakout, was successful, right? So that's one of those things you just take it with a grain of salt. Even though it says here we want to be able to have high volume or high participation, that isn't always the case, right? So I've seen analogous features where we're able to see, all right, the price wasn't that high above VWAP, but the trade still makes sense. All right, so let's go ahead and go to Claude Code. What we're going to do now is being able to create a little baby strat, right? So what we're going to do is say, before we even get started, what do you know about VWAP for when used for 0 DTE on 1 minute charts? So let's go ahead and have Claude Code break this down, and now we're in a position to actually create a strategy for VWAP. Now I'm thinking that we're going to create a strategy using QQQ. Now here's QQQ, right? I'm looking at it on the 1 minute chart, and what this lets us know, so each one of these candlesticks represents 1 minute of action, right? If the candlestick is red, we're seeing that the sellers or the bears are in control, right? So they're trying to push the price through what? Through the resistance to the support levels, excuse me. And we see you have a big body candle here, right? Little or no rejection. I mean, there's some rejection here. Whenever you see a wick pop out, that lets me know that there's rejection, right? So there's a bit of rejection here, but not that much. Not as much as right here on the buyer's candle or on the green candle. When we see green candles, that lets us know that the bulls are in control, but we're seeing a bit of rejection when we have those wicks pop out. So what we're going to be doing now is finishing up or going over a super baby strategy for VWAP, right? So we can actually tie everything together. And this is going to be our algo strategy. What is an algo, right? An algo is just a set of rules and instructions that we create such that a computer can buy and sell options for us automatically. And all we have to do is watch over it, right? So this is going to be our rules and instructions for this strategy, and we're going to go over this. We're also going to go over our back test and maybe do a round of 2 of optimization and see how well this goes. So the first thing we have to be able to recognize is that we're giving the strategy parameters, right? So we're saying that you can only trade between 9:32 a.m. and 11:11. So 2 minutes after the market opens and about 49 minutes before we have the lunch crush, right? Then we're going to say that it's going to trade 1 trade per day, right? We want quality over quantity. And then the maximum hold time is going to be 3 minutes. So this is a 0 DTE strategy, 0 DTE letting us know that these are option contracts that expire the same day. So we're getting in and we're getting out extremely fast, right? So for position sizing, we're going full in and full out. We're not buying incrementally in or scaling out, right? No adding on. We're keeping it super simple. So this is the conditions that we need in order to figure out if we're going to take a trade or not, right? So the first thing we're checking for is the direction. We want to be able to figure out which way is momentum pointing. Momentum is just a fancy way of saying which direction, which way is the market going, right? So EMA is going to be the exponential moving average. This is what we're going to be using in order to figure out which way is momentum pointing, right? Now we're using a crossover EMA, right? So we're using EMA 2, which is we're needing 2 and 12 minutes in order for us to be able to figure out which way the market is going, right? So the fast line is going to be the 2 EMA and the slow line is going to be the 12 EMA, right? So for calls, and calls are because we're bullish on the market, we want the market to go up, right? We want the 2 EMA to be greater than the 12 EMA, and that's how we're going to get a call position. Or if we have the 2 EMA less than the 12 EMA, that's how we're going to get a put position, right? So think of this like two runners, right? If the fast one is ahead, the race is going in that direction. Or if the slow one is ahead, the race is going in that direction, right? So no matter which direction the market is going in, we can either trade in. So we're bi-directional, right? So the next thing we're looking for is VWAP. This is the main thing while we're here, right? VWAP is letting us know which side are we on, right? This is mandatory, no exceptions. So for calls, the price must be above the VWAP. We're going to go. And then for puts, the price must be below the VWAP, right? So think of VWAP as the fair price line. Call works better above it, and then puts work better below it. Now, calls are going to be the items because we're bullish on the market, excuse me. And then puts are going to be the item that we're going to be purchasing when we're bearish on the market. Third thing we're going to be looking for is the RSI permission, is momentum reloading. So we're either going to be using RSI 2 or 3. We're going to be starting with RSI 2. Now, RSI is the relative strength index that allows us to know if something is overbought or oversold. And we're going to be using 2 minutes, right? And we're going to be super, super fast with this. This is a 0 DTE strategy, right? So with being a 0 DTE strategy, we have to make sure that the indicators that we're using are going to be keeping up with these strategies, because sometimes, and it's all depending on which period you use, these indicators could be a bit lagging. So that's why I want to make sure we keep it as real time as possible. So we're going to be starting with RSI 2, and RSI 2 is letting us know we're taking 2 minutes of data in order to measure if something is overbought. If we have FOMO setting in, people are thinking that they're missing something, so they're buying an asset way too much, or oversold, right? Individuals are panicking. They're thinking that the market is going to crash, or we just saw a flash crash, right? A lot of things that we can see in an oversold environment, right? So for oversold, we're buying a call because now the market is recovering. And then for puts, for overbought, we're rolling over into a put because we think that the market is rolling. So RSI is permission. It's not the trigger. So think of it like a rubber band stretched too far. We want it to snap back, and we catch it as it starts moving in either direction. So again, we're bi-directional. And the last thing we're looking for is the candle confirmation. Does the candle agree? Excuse me, I want to cough in your ear. So for calls, we're looking at the calls are, for calls, we're looking at the close of the candle is greater than the open. This is going to let us know we have a green candle. We're going to enter. And then for the puts, we want the inverse. We want the close to be less than the open. This is how we're going to have a red candle. So think of the candles like the voting, making sure it agrees with your direction before we commit to it. So this is how we're going to exit the position. Again, what I first gave you is, this is the parameters for the algo, right, for our strategy. So it's only trading between 9:32 and 11:11. It's only one trade per day. Once you're actually in a position, you only have 3 minutes in order for us to exit, and we're going to go over that. And our position managing is full in and not full out, right? We're not scaling, right? So we're keeping it super simple. And the way that we're going to exit a position is one of 4 ways. It's going to be our take profit 1, which is going to be 14%. As soon as we cross 14% in a position, right, and we're going to close out the position and then take our profit and clear it. So we won. Let's lock it in and clear it. or then it's going to be TP2. This is going to be RSI as the rolling momentum, right? Remember, RSI lets us know if something is overbought or oversold, right? So momentum is fading. Go ahead and take profit. Or we're going to have our stop loss. Now, stop loss is we're cutting our loss, we're protecting our capital. So if the trade goes against us, because nothing is guaranteed when it comes to this market game, right? If somebody's promising you anything guaranteed, like, get your ducks and run, fam. Like, they lying to you, kid. And then we're going to have a stop loss of 3 minutes. What that lets us know is that the strategy has 3 minutes in order for these three things to happen, right? If it doesn't happen, I don't care. Close the position and get us out no matter what. So here's our quick reference card, right? In order for a call setup, we want the EMA2 to be ahead of the EMA12. That lets us know that momentum is pointing up. Then we want the price to be greater than the VWAP, right? This lets us know that we're above fair value. RSI is recovering, overbought is then we're going to bounce it, expecting that it's going to bounce. Then we have a green candle. The close is greater than the open. And then for a put setup, we have the slow EMA ahead of the fast EMA. Momentum is pointing down. The price is less than the VWAP. It's overbought, and we're going to expect it to drop. And then we have a red candle that populated. So this strategy is all about alignment. Every indicator is pointing the same direction, equals higher probability of the trade. No means wait for the next setup. So here's our actual strategy that we created, the VWAPper type shit. Again, I went over this, so I'm not going to go into this too much because I just went over the strategy. This is the backtest for the strategy, and we're created this backtest using Python. This is going to be a strategy that uses the EMA trend, right, to figure out which direction the market is going into. Not that way. There we go. There we're going to be using the VWAP location to figure out if it's above or below the price. Then the RSI recovery in order to figure out, okay, are you dropping or are you bouncing, right? So we talked about this. This is how the backtest looks. One thing in order to notate is that all of our strategies start with $100 unless told otherwise, right? Because we want to dispel the notion that you need thousands of dollars in order to trade options. So all of our algos start with $100, and we want to see how well they perform in a backtest. What is a backtest? A backtest is being able to take your strategy, drop it off in a time machine, and seeing how well it performs in a particular year. If it performs well in a year, the school of thought is that if it performs well in the past, there's a high likelihood, no guarantee, but a high likelihood that the strategy will perform well once paper trading, or perform well once you actually load it up with real money, right? And this is the process that we're going through, or the process that I had. But nonetheless, let's keep going. And then we have our the way that we're going to select the option. We're using delta in order to figure out the closest distance to delta, the distance, the premium, the liquidity, gamma, and then IV. We already talked about our exit rules. We want to be able to have slippage costs. The reason I'm having that in here, we want to be able to model real world trading as much as possible. So if you don't have your cost in there, then you're going to have inflated returns. So we want to make this back test right harder, so you don't make practice harder than the real game. So we're making practice here a lot harder than the real game. And this is how we're calculating EMA, calculating RSI, calculating VWAP for the day. Why are we calculating VWAP for the day? Remember, VWAP is new what? Every single day. So we have to be able to calculate it every single day. And that's the function for us being able to do it. One thing I just want to go over real quick is the position sizing. We have to calculate gamma, and we're using Black-Scholes in order to calculate gamma. Reason being so is because our data set does not provide gamma. It's like an extra $40 for gamma. And I was like, bruh, who's going to do that? So you can calculate gamma yourself using Black-Scholes. So this is the equation on how to do it, and this is the library you're going to need in order to do it, and this is the equation, right, in order for you to calculate gamma. Option selection, we already talked about that. Next thing I just want to go over real quick is the position management, right? Again, as you all saw, all of our strategies start with $100. If the strategy is less than $500, it's going to use 88% of whatever the balance is in the portfolio. If it's between 500 and 999, it's going to use 55%. And if it's greater than 1,000, it's going to use 22%. So I think that's enough of me talking, right? Let's go ahead and actually run this back test and see how well it performs. Or maybe it doesn't perform well. Who knows? Let's go ahead and run her. I have to open up the conda environment. What is a conda environment? It's like a garage for having all of your tools and resources that you need for a particular strategy. And for any option strategy that we need, we already have this conda environment, right? And it has all of these different Python libraries that we're going to need whenever doing anything when it comes to options. So I like to be able to keep it in one nice succinct place. So it's Algo, baby. Now we're going to actually run our back test. We're running our back test on 2024. It's pulling in the Greek data. It's also going to be pulling in the open, high, low, close data, the actual stock data. What it's doing right now, it's reading the Parquet files. The Parquet file is like a CSV file, but it's for computers. It makes them a little bit easier for them to read. It's converting it, and then now it has the same thing. I really think this is a waste. I thought I took that out, but I guess I did it. Now the backtest is going to run. Backtest runs a little bit quick around here. If you followed us before, you would notice like backtest used to take me like 10 minutes just to run one backtest, fam. Now it's taking me a little bit under 2 minutes, right? If I get this data loading thing right. So here's the backtest, and it's off. And you saw how quick that was? So the backtest completed. Out of 252 days, I think that was, in tradable days, within 2024, we completed 364. I apologize. We completed 252 trades. So we started at $100, right? And the strategy was able to go from $100 to $31,906.12. And this is our little baby strategy. Imagine if I really would have put time into this, where this would have gone. Our Sharp ratio is 0.61. Serentino ratio is 265. Calamar is 18822. SQN 9.6. So the strategy has a win rate of 72%, so 7 out of 10. And again, I didn't even try, fam. This is how, just to let you know, like, it is super simple and super easy in order for us to be able to create algo strategies, right? We just have to understand what the indicators themselves are doing. So that's why I'm using this particular series here, right, in order to break down our different indicators. We talked about ADX. I have ATR coming out. I have Bollinger Bands coming out, right? We're going to be breaking down these indicators so we can understand it. Once we understand the indicators, once we understand the rules of the game, then we can play it to our own advantage. Imagine if we would have tried where this would have been. One great thing I love about this, so 7 out of 10, right, the strategy lost. But those 3 times that it lost, right, if you're looking at set of 7 out of 10, there were 68 total losses, but for every loss that it had, it made $8 back. So that's what this profit factor is letting me know, that every time the strategy lost, it felt so bad. It felt so bad that it had to go make us back $8, right? On average, our trades are about 126. Best trade was $2,215. Worst trade, even if you triple it, it's not going to touch the best trade. Average trade is 198. Average loss is 66 bucks. And here is the classification breakdown, right? So the trend strength, we're looking at moderate and weak. Our moderate, we're at 88%. Weak, we're at 69%. So school of thought will let you know, hey, maybe we should filter out these moderate or weak indicators. And then our deep RSI levels, I'm at a coin flip, so barely winning. Moderate, same thing, at a coin flip. Recovery, it's looking like the best one is late. When we catch a late reversal, it's looking like we're winning a little bit more. So what I'm interested to see in VWAP distance, fair, moderate, close, fair, not even winning, moderate is a little bit better. So what I want to do is let's run this on 2023 before we do anything else. So Python, boom, 2023. Are you going to listen? Oh, no, guess what? Because we have to do that. So Python, boom, year 2023. All right, I still did something wrong. Okay, I have to put it a little bit closer. A little spazoid. Okay, clear. Year 2023. Holy cow. Sometimes, fam, things just don't, you know what? What is the proper command to run 2023. Sometimes you gotta ask for a little assistance, and that's what we're doing here. Bro, I didn't tell you to run it. I told you just to give me the command. What is the command so we can run it? Thank you, bruv. All right, let's 120. Oh, so it's lowercase. Bruh. All right, so we're running on 2023. We already saw what it did on 24. So let's see what is the performance on 2023. And I think I'm not going to touch too much with this strategy, right? Because when you overdo it, that's when things get like you try to probably overfit it for a particular year. For so 24, a little bit of a bullish year. So I expect if you do, you can create your most basic strategy. It will perform well at 24. That was your bullish year. 23 was a little bit of a mixed year. So we're almost seeing the same thing, fam. Strategy went from $100 to 30,000, so a lot more consistent. Sharp ratio is a little bit higher. Serentino ratio is a little bit higher. Everything's a little bit higher. Win rate took a little bit of a dip, right? It was 72, now it's 71, but that's a little bit. We're winning a little bit less, right? Max, I should have looked at this. The 13 trades in a row we won, and then 3 trades in a row we lost. So it's looking like almost these, strong signal. We call it a strong signal in 23. So it's looking like this strategy is a lot more robust than what I gave it before. So what I'm going to do here is use this as a stopping point. We are going to be maybe creating a bot for this strategy. If you want us to create the bot for the strategy, go ahead and put in the comments now. If you do have any other questions, drop it in the comments and I definitely will answer it. It is your boy Kreative. I will be back at it again with another episode. And please, if you love this video, if you like this video, don't forget to like and subscribe. If you like this, that means somebody else may too. I appreciate you. Y'all have a good one.